Why, hello, everybody, and welcome back to our Cash Coaching Hour. A little bit of a different setup today. If you're joining us live on YouTube, on Facebook, or on Instagram, normally I've got that top spot, Jesse, but today Jesse's got it. Jesse is in office. The rest of us are at home today, and that's why we've got a little bit of a different view. But I want to take a second to introduce myself. If you do not know, my name is Jonah. I am one of the Banking Bros. You are watching on a Banking Bros channel. Again, we've got the Banking Bros over on YouTube. We've got our Facebook page and especially our group. Shout out to the group members who are watching. And we've also got our Instagram at the Banking Bros. And joining myself today, main screen mainstay, we've got my buddy Jesse W. Durham. Jesse, why don't you go ahead and introduce yourself?
Yeah, what's up, everybody? Jesse, Whole Life Durham, as we say around here, having fun talking about this infinite banking concept, how to save your money and spend somebody else's at the same time. I hail from New York, but I am North Carolina, but I am in office today, South Carolina. Don't make fun of me, Sean. Don't laugh at me. So many things going on. I'm licensed in New York. Cool. I mean, there's that. So
you know, you were from New York, man.
No, definitely not. They can tell that by hearing my voice.
I love it. Jake Doster says, hello, fellas, and Nelson Hollins. We got some regulars. Nelson says, greetings, and that is awesome. Hey, Nelson, good to chat with you again virtually. Okay, joining me in the small slot here, small screen, we've got my buddy out of Pensacola, Florida. His name is Sean King. Sean, the floor is yours.
What's up, everybody? Happy to be here again. Happy Thursday, coming into this weekend pretty strong here. Just like Jesse said, looking to help educate you guys on this. It's a never-ending learning process of how to take back control of the money flowing through your life. The more control you have, the better off your life will be. So we're implementing this stuff in our own lives with our families, our friends, and we're hoping to help educate you do the same.
I love it. What an introduction. I love that. We've also got a sup gang from Scooter Boy. Jesse, that must be one of your people.
Yo, that is a Razor scooter.
It's a new handle to me.
A new handle to you, but they got the Razor picture from the handle. I love that. And
yeah, they must be our generation.
Yeah, I love it. Hey, them Razor scooters used to get ankles. Come for ankles, man.
All of them. Shins, all of it.
Right. I love it. Okay, Jesse, tell the people, if you wouldn't mind, why we're here, why there's three of us, why we're taking an hour out of our day to chat with them. What in the world's going on? Why should they pay attention to us? Why are we here?
Yeah, well, it all started with what we personally saw. So back in 2015, there I was, married, second baby boy on the way, launched a business, found myself in $50,000 worth of debt. And I saw this concept, okay? It was presented to me via a presentation. And we actually have a video presentation that you can check out on all of our handles. And then I got into this book, this Becoming Your Own Banker by R. Nelson Nash book. And for me, where I was at in life, I just saw a way for me to be able to save money and spend money at the same time for the things that were very relevant in my life, which was I wanted to save money to protect my growing family. I wanted to spend money to get out of that debt, pay off that family car, pay off those student loans from going to college, like I was told to do, pay off those credit cards, some bad financial decisions that I'd made, right? Ran up credit card debt. So I just saw a way to be able to accomplish all this at once, create legacy, get out of debt, advance my family financially because of this concept. So that's when I saw it for the first time. Now I've implemented the concept for a decade, and we are here today to be able to teach you that very same concept and walk that journey with you.
I love that. I want to give a big shout out to the people over on Instagram who are watching. So I saw Lincoln Meadows jumped in on Instagram. We appreciate you. There's also John Guerin over on Instagram. Thank you so much for being here. Also, we are so happy that you're here. Hopefully we can show you, learn you some things, how they used to say, right? Teach you some stuff. But I love that. Sean, why don't you first, you've got to give us a quick answer to this one. Scooter Boy says he has a green Razor scooter. So you got to first tell us what color was your Razor, if you can remember.
Yeah, I'm a red guy, so red was definitely the color of my scooter.
I love it.
Green is cool, but it's the color of cash and the banking bros and all that good stuff. So
There it is.
that's some good style, buddy.
I love it. But here's what I'd like you to do. Jesse kind of gave us an intro to how he discovered what in the world infinite banking is. Why don't you do the same for the people?
Yeah. So again, I basically saw this. I'm the young buck here. I saw this a few years back now. And for me, very similar to Jesse, I was in a position in my life where it was just like, I've got a lot of this stuff going on. My wife and I are making pretty decent money, but it seems to keep disappearing places. We have these debts, we have some savings, we have student loans and mortgages and stuff. And the idea was, it doesn't seem like we're controlling our lives. We were putting money into places where it was at risk, and we just didn't particularly like that overall situation. So I started digging deep into what I believed wealthy, influential people were doing around me. And I came across this concept and just started to realize, hey, I don't have a lot of control over the cash that's coming in and out of my life. Somebody is essentially handling my money all the time before I get it. And then I'm paying it out to all of these other places before I pay myself and I take care of me, my absolute best asset available. And so when I got introduced to it, it didn't exactly click right away because, again, I read this book first. And to be honest, some of it went over my head, but some of it made sense. And after digging more into it, I was just like, oh, okay, I get the concept of control, the concept of leverage, the concept of being able to utilize other people's money to build wealth. These are things that I know that wealthy people are doing. And so it just started going down that rabbit hole, learning more and more. And it brought me to where I'm at today, 5 policies within my family. Dad's got policies, mom's got policies, nieces and nephews have policies. It's something that we've created this whole family system out of, and it's just getting started.
Man, I love that. I love that. I guess I'll do the same for everybody who's watching out there. And also, big shout out. Hey, Nelson, I see you out there. Thanks for the comment. I appreciate you. But let me tell you how I discovered and figured out infinite banking. It was about a decade ago. I'll have to actually do the math in my head to figure out how long ago. I'm sure it was longer than a decade because I've been saying a decade for like a year. So it was about a decade ago that we were introduced, my brother and I, the Banking Bros, introduced to what in the world infinite banking is and was. And it was confusing at first, but because of my personal background, having worked at a bank, having worked in insurance, it made sense to me. Confusing, yes, I don't exactly know how to implement in my life, but truthful. Like I knew what they were saying to be true. I knew that you could actually do it this way. And so I was excited about that. So for me, person who grew up in a family that was military and ministry, just not really having lots of money, really at any point ever, I saw this as a way that I could change that, not only for myself, but for future generations to come, for a family. I just had to learn what the wealthy were doing, similar to what Sean said. I had to learn, right? I had to plug in. So similar to these guys, I read the book. I read more than one book. I watched a YouTube video or two. There weren't as many as there are now back then, but I watched one or two. I talked to people that were implementing themselves so I could figure out exactly what they were doing and how they were doing it. And fast forward, similar to Sean, now we've got the whole family involved, right? We've got lots of policies, double-digit policies for my family. I've got friends, families, colleagues, who doesn't matter. Everybody around me seems to have some of these policies and are using them appropriately for the infinite banking concept. And that's what I love most about infinite banking, how it brings people together and ties them to something instead of being taboo. How money is sometimes, it starts to tie you and the people around you to talking about it more. How can we grow it? What should we do? How is it working? That sort of thing. So that's a little bit about me and how I got started with infinite banking. We got a big shout out from the other banking bro, Jeremiah, over on Facebook. He says he's headed to Bristol, Tennessee.
Safe travels.
Safe travels, right. You ever been to Bristol, Jesse?
I've been around Bristol, never been to Bristol for probably what Bristol's known for.
Yeah. I think it's known for some NASCAR races. Yeah.
Right.
Okay. Yeah, I thought so. Very good. So here's what I thought might be fun. I think, Sean, you alluded to it in your kind of story. But sometimes when we talk to people about infinite banking, we tell them about some of the famous older folks, or maybe some of the famous newer folks who have used infinite banking before, used whole life cash values. I thought maybe that would be fun today. Why don't we take a second and say, what's your favorite story about someone past, present, future, maybe someone famous or someone that the people who are watching would know, or again, if you don't have one of those, maybe someone they would know that's used infinite banking in a really cool way that really related to you. Jesse, you have something like that for us?
Yeah, I do. So I was in networking when I saw infinite banking. I'd launched a business, and I was in my first year of business in 2015. So I had a lot of new things going on at the same time, networking being one of them, infinite banking being one of them. So there's a company called The Pampered Chef that I knew about prior to infinite banking, prior to my own business, but I didn't know any of the background on that company. So really cool. I'd bought my wife stuff from that company before. So we had consumed from that company. Great stuff, right? And she's happy. That's a win-win. But Miss Christopher, that launched that well-known business, okay, all across the nation, did so utilizing policy loans from Cash Value Life Insurance. So she launched this business idea that she had because she had put capital somewhere where she had contractual access to it. Didn't have to ask anybody permission, didn't have to go into a bank and say, well, hey, here's this idea that I have, and will you fund me? All that kind of stuff. No. She launched the thing herself, which ended up eventually getting bought out by Berkshire Hathaway. Okay. It's just such a neat story to me. So that's the one that sticks out to me in the moment.
I love that. I love that. What about you, Sean? You got something for the people, something that relates to you specifically, that you've heard people using their cash values for, using infinite banking for?
So I specifically relate with I'm big in sports, played college basketball at the Division I level. And so I was a big sports guy. Really excited about football season coming back here, preseason starting tomorrow. And when I most recently, this is probably the most recent case, heard that Jim Harbaugh, who used to be the coach, got a lot of places, but most recently before the Chargers was the coach at Michigan when they won the national championship, that he had the school, Michigan, pay him or pay his whole life policy premiums, essentially his entire paycheck into these whole life policies, because he understood the value of what that type of policy would do for him long term. I just thought that was crazy. Like you hear about these older people that have done it, and people are like, this doesn't seem like something new, hip, or cool that smart, intelligent people are doing. And yet you have one of the best coaches in college football, one of the best quarterback whisperers in the NFL, who's like, no, don't pay me this cash through my salary. I want this in a policy. I want you to dump all of that cash into a policy and let me basically handle how I want to handle it from there, being able to leverage it and do these other things. And I know a bunch of us have links to that article and everything because it was on, I think, Sports Center, ESPN wrote an article about it, whatnot, but just such a cool idea. Like, okay, that just solidifies in my mind, like, hey man, this guy is extremely intelligent. And if he's willing to say, pay me these millions and millions of dollars that you owe me, but put them into a life insurance policy first, specifically a whole life insurance policy, I know I'm probably doing something right here.
I love that. I really do. Jesse, you got some fans showing up in the comments, man.
What's up, Dion? I see you. Hey, brother.
Yeah, and we also got, I'm going to mispronounce it. I'm sorry in advance. Is it Napri?
Napri? That's what I would have said.
Okay, Napri. We see you out there. Hello. If you've got questions, comments, or concerns about what we're talking about, whole life insurance, infinite banking, cash value, having more money tomorrow than you have today, guaranteeing cash flow for your whole life, throw them in the comments because we want to interact with you and we want to talk to you. Okay, she says yes. She says yes. We got it right. Napri. Awesome. Thanks for being here. Thanks for listening to us. Again, if you've got questions about cash flow, put them in the comments. We want to talk through it. So I've got something fun to say also in the sports realm. I'm a big sports guy also. So Sean, you mentioned Jim Harbaugh. I think that's an amazing story. I missed the article when it came out on ESPN, but I totally caught the article once people started sending the link around, right? But here's another one that I think is super fun. Okay, so you guys have heard about Bobby Bonilla? Yes,
Yep.
no, maybe
Yep.
so. Okay, Bobby Bonilla is a baseball player, maybe for the Cubs, if I get that correctly. You guys can help me out if it's not the Cubs. Has not played baseball since like 99. But every July 1st or July 2nd, it's one of those 2 days, he gets $1 million check from his baseball team, part of his contract. He has that contract for maybe 5 or 6 more years. So this dude hasn't played baseball in 25 years, but he's still getting $1 million every single year. And this year was the very first year that ESPN came out and said the Cubs did that through life insurance. And I did not realize that. You know how, because these baseball players get crazy contracts and you just think, oh, they're paying for it, whatever. I had no idea. But of course, when they put out the article, I thought to myself, of course they did it through life insurance. Like, these guys are not dumb. If they have to pay this dude for so long, of course, right? It just made so much sense. So I thought that was pretty cool. That one just came out to my attention this year, literally a month ago, that he was paying that. Okay, Napree's got a question here. How about an IUL? Thank you. She wants to know differences. Now, before, Jesse, I'm going to let you have this one, okay? But before we answer the question, actually, I'm going to put it back up there. Everybody knows what question we're answering. Before we answer that question, I want you to know that on this channel, we're talking specifically about whole life insurance, not IULs. And Jesse's going to jump in and tell you all about it and why.
Absolutely. I had a conversation just this week with an individual in my process as well about product selection, about what is the ideal asset to use to implement this concept of being your own banker, of saving your money, spending somebody else's. So whole life insurance versus IUL, in a word, risk. In one word, that's my one word answer, is there's risk inherent in an IUL, which is an indexed universal life insurance policy. That's not there in whole life insurance. Whole life insurance is a unilateral contract where 100% of the obligations, risks beyond you paying the premium amount that you choose to pay to own this type of an asset. You get to pick that number. Everything else is then on the insurance company. The death benefit is guaranteed. The cash value is guaranteed. It's a guarantee that if the company experiences profitability, which it has for over 100 plus years, all the companies that we own policies with and that we write policies for our clients with, all of that is guaranteed. But risk is inherent in an index universal life. And then we can go into the details there. But in that one word answer, that's it, risk.
I love that. That's a great way to answer the question. Sometimes people get a little confused, Napree, because they go, well, the IUL that I was sold or I have or they told me doesn't have any risk because there's an upside potential, but there's downside protection. And the answer to that, actually, if you're thinking that, because some people I'm sure out there who are going to watch this are going to think that, the answer is yes, that's what they said. There's still risk in your policy. It's risk in other ways that you probably need someone who's licensed and knows how to read the paperwork to kind of walk you through. Sean, you got anything to say about that?
Yeah, one of the problems with IULs, and I used to write these because this is what the company that I grew up in my life insurance life was kind of teaching quite a bit, is whole life is built on, like Jesse said, a guaranteed base contract where the premiums will never increase. The problem with the IUL is the chassis that it's built on, the foundational piece, is an annual renewing term, which we can argue whether which one's going to have more growth or whatever. The idea is that the IUL has the potential to grow more, but it also has to grow more, because if it doesn't, and you get to a point where that term that every year keeps getting more and more expensive, and you're not maxing out the amount of money that you can put in there, and you also don't have a large lump sum of cash that's been built in there, it's going to start pulling money from your policy to pay for that annual renewing term. And that's oftentimes one of the ways that policies end up imploding, because it just gets so expensive and you don't have enough cash value because it hasn't grown like projected. And so it essentially implodes on itself. So we like the guarantees because we can tell you without a doubt in our mind exactly what's going to happen, worst case scenario, on the guaranteed side of your policy.
I love that. Jake says his first introduction to IBC was actually a family member, brother-in-law, telling him about a group called Wealth Without Wall Street. And that was probably 5 years ago. I love that for a few reasons, Jake. One, generally speaking, this is super generic. Generally speaking, brother-in-laws do not help you out with finances. Generally speaking, they're the most broke people you know, right? And they're telling you, nah, nothing will work. We just out here on the hamster wheel spinning, you know.
Does that make us the best brother-in-laws in the world then?
Yep.
So I'm thankful your brother-in-law is not one of those. And secondly, there are a bunch of groups out there that are amazing teachers of the infinite banking concept. Wealth Without Wall Street is absolutely one of them. We love those guys over there. So that's a great group to check out. I love that. Jesse and Sean, Rob says, well done. Well said.
Appreciate you, Rob.
Thanks, man.
That means a wealth of knowledge as well.
I love it. Okay. And then we've got another question from Dion. So, Jesse, this one's for you, sir. I'll pull it up and read it and you answer. It says, I've seen how real estate professionals have utilized infinite banking to pay off mortgages sooner than 30-year terms. Have you guys structured for that?
Yes, great. So we do specifically structure policies based on both short range and long range goals of our clients. So that's my belief, is that a policy should be flexible enough to help facilitate your 12-month goals and your 12 generation goals. Okay, so as big as you can think, we want to structure a policy to be able to help you get some tactical wins over the next year, but then of course have that play into your long-term plans. So generically that. Now, specifically for real estate, absolutely. So, and people have strong opinions here, right? So there are different angles that we could come at this particular question from, of tying infinite banking to a particular action like real estate investing. What I would like to say at a high level, though, is of course that everything is finance. And for people that are looking for, yes, more profitability, like you're talking about, Dion, but also a lot more control than you will find in conventional finance. For people that have a high value on controlling capital, controlling terms, controlling the ingress and regress of cash and capital from, you know, a private banking system for things that you're doing in real estate, people that have a high desire for control, infinite banking does a lot for them. So the control, the profitability, those are the two strong points that I say, and with a big yes.
I love it. Hey, Sean, I'm going to give you a chance to answer this one also, but real quick, Napri says she's 52, husband's 59. Would it be a good fit for us? So we're going to let Sean answer Dion's. We'll come back for yours, Napri. But here's what I'd like to actually do. Jake, if you're out there, if you can, man, leave us a comment for Napri. She's asking if it's a good fit. She says she listed her age, so maybe she's wondering, am I a little on the older side or whatever she's wondering. Jake, if you would throw something in the chat for her, we'll come back to her in just a second after Dion. Sean, what do you have to say about Dion and real estate and structured for payoff mortgages, stuff like that?
Yeah, Dion. So the great thing about this is, one, we structure everything for the individual. So you're going to come to the table telling us exactly what it is that you're wanting to do with your policy. Now, obviously, things may change over time, but the idea is high early cash value. So at the end of the day, what's so great about this is you have the flexibility to do whatever you want with your policy. If you've got cash in there and you want to start paying down your mortgage faster, some people are about that, some people are not. But the cool thing with this is nobody's asking you questions. There's not a bank asking you what you need this money for, anything like that. So if you want a policy structured to help you pay off your mortgage faster, which is really, again, all just basically having high early cash value and being able to funnel a good chunk of money continuously into your policy, then we can build that plan for you. That's how we build them for most people. But I take my money out and I go put it into investments, land deals, private lending, whatever it may be. Still large amounts of money, like you might be utilizing to pay off a mortgage faster. But that's that flexibility. And just like Jesse said, the control. You are in control of the system. You are in control of everything that goes on. So it's 100% up to you what you want to do with it. But that is one thing that a lot of people do utilize them for.
I love that. Amazing. We also have, Jesse, this for you, for your answer. He said, good information. Yep.
You are welcome, sir.
Okay, we're going back to Napri. Here's her question again. 52, husband's 59. Is it a good fit? And then Jake, thank you, Jake. I know Jake, we called on Jake last week, right? And Jake says, I'm at work, guys. You can't leave me be. But he still got his comment in there. I appreciate that. Okay, so Jake says, yes, always a good fit. Cost is up to you. All up to you. And then Rob jumped in and also said, Napri, banking never stops regardless of age. So you're never too old to take over the banking process. How that works for your situation and what these fine is what these fine dudes can help you with. I love it. So I'll jump in and give you an answer also. Thanks so much for your question. So yeah, Napri, the simple answer is yes, of course it's a good fit. And here's why. What infinite banking allows you to do is allows you to guarantee, not our words, coming directly from the insurance company themselves, but guarantee cash flow for the rest of your whole life, because we're going to build it inside of whole life policies, what Jesse talked about earlier, and minimize the risk. We don't like the risk inside of IULs because it might not be whole life, right? And we want cash flow for our whole life. That's what we're here for, right? So the answer is, I know you're 52, your husband's 59, but you guys are going to still spend money. You're probably going to spend money before the day's out, tomorrow, this week, next month. That's how it works. Wouldn't you rather keep or save your money and have access to the insurance companies so you can spend theirs? We teach that sometimes, or we kind of coin that phrase sometimes, the save and spend system. This is the only place I've ever seen where you can save your money while you spend someone else's at the same time. You can do it separately, one at a time, right? But you cannot do them at the same time unless it's inside of whole life insurance. And that's what I love about it. So hopefully that was helpful. We got some other people giving you some answers in there. Let me know if that was confusing or if that helped. And we'll keep moving. All right, Jake says he's not working today. I called him out for work and he's not even working today.
That's how he's able to jump in. That's great.
I love it. And then Sean, for you got fire from Dion.
Good.
Jesse
hoping that's making sense, man. Hoping that's making
sense. Got the good information. Sean got the fire. So
it's not a competition.
Sean's already said he's the red guy. Fire. It makes sense.
There we go.
Okay, I understand. Napri says thank you. Okay, perfect. Okay, Andre just jumped in. He's got a question.
What's up, Andre?
A comment. Andre says, imagine when a child has one, 80 plus years of growth. I totally understand that. I love that. We've all got kids on the call, so now we got to talk a little bit about kids. Jesse, you're up first. Tell us what you love about children and infinite banking and what you've got set up.
Yeah, we've got 3 children, 4th on the way. So super excited. So I saw the implications to the short range and the long range connection right away at some level, meaning that I saw with infinite banking in this whole life insurance that day one, we were going to have a massive amount of protection that we otherwise would not have had for these next generations. I'm just the kind of guy that I want to leave a big lasting impact in lots of areas. Okay. But financially speaking, infinite banking with whole life insurance allowed us to begin that process of making that intergenerational impact from day one. And that's just grown and increased. We're at a place now where, generations to come, we'll see multiple 7 figures. And I anticipate that that's going to grow over the course of time, just like it has over the past decade. But, in the here and now, we're facilitating conversations with our children because our oldest are in those double digits, 10 years old, 12 years old. They're at a point where they're still learning a lot, but they're also doing some things where we can collaborate. They are earning some money from a couple of different areas, things that they help us with around the house or that they work with their papa. So now we're talking about and actually making policy premium payments together. We're making policy loans together. We're making family business deals together. So I'm just excited about all of it, the protection, the legacy, the things that we're doing today. You know, they know and understand that when we go on vacation, it's because we're doing that from a private family banking system. When we pay these property taxes on this property that we own, we're doing that from a family banking system. So just lots of different things there, but I'll stop because I know you guys got a lot to contribute as well.
I love it. Sean, you're up, man. Talk about those kids.
Yeah. Oh, the kids policies, man. That's like the most exciting stuff because it's good for us right now. We're in our 30s. Jesse, you're not 40 yet, right?
I just turned 40.
Right, you just turned 40.
Just a couple of months ago.
So
thanks for trying to include me, though. I appreciate that.
We're all in our 30s, but boy, oh boy, it gets so good as time goes on because compounding's best friend is time. So I have an 18-month-old son, about to be 19 months old, year and a half, and he's got 2 policies for himself. And what's cool is this is one of the only assets that I'm aware of that literally affects 3 generations at a time. So what's happening is we have this policy on our son. Of course, he can't use it or anything right now. He's 19 months old, but we put money into it for him. We do all this stuff for him, but that's money that we can access as his parents right now to help build for him, for his future, or to utilize for ourselves for our future. So that's generation number 1. Generation number 2, of course, is him. He's going to be able to utilize the policy. And as we teach him, just like Jesse was talking about, as he starts to grow, as we educate him and hopefully a sibling coming up here soon, that they're never needing to worry about the idea of having to rely on a third-party institution to get their hands on the capital that they need. So he'll be able to fully utilize that. And then the 3rd generation will be his children, because that policy is going to grow massive over time and create an extremely large death benefit. His multiple policies that he has, which will expand to even more. So by default, when he is gone, his children will have a legacy that is left for them in terms of the financial side of things. And hopefully, if I can help it at all, we'll have an educational legacy around what we've built over these last 3 generations. So the kids' policies are where it gets the absolute best. You can still utilize them as a parent for the kids as they start to grow, and then allow your kids to start utilizing them like Jesse is doing with his kids right now.
I love that. I think I'm up. Okay. So I've mentioned this a few times before. People think it's funny, but my 7-year-old currently in the policy that we, the parents, bought for him, same thing we're doing that Sean was doing, right? He's actually got more cash value in that policy than dollars I had as an adult, probably at like 22, 23. He's got me beat by far. And I love that. I love the 3 generation thing that Sean was just talking about. It's the same deal for us. We use it, we control it. Think about how much easier and stress-free maybe that first car is, maybe college tuition is if he wants to go, right? Maybe getting married if you're paying for that. If you've got daughters, right? I've got 1 daughter, she's in the middle, so I think I'm paying for it. We haven't really had that conversation yet between me and my wife, right? She's only 5, but I think we're paying for it. And think about how much easier it'll be because we're just going to utilize cash value from these policies. We're going to use them now, today, grow them. So by the time that we need to do these big purchases, there's plenty there for us to use. And that's what, to me, like peace of mind. Peace of mind is actually what I get from using a guaranteed product like whole life insurance in order to fulfill my family's personal and private financing needs. So Napri says she's got a call with me on Monday. I love to hear that. I'll be happy to talk to you. I'll call. Hopefully you pick up, right? Let's do it. I love that. And then Jake's got a pretty cool comment here. I'm enjoying teaching my son about this concept, and we're working on a plan to start his policy fund his policy together. I love that. Great work, Jake. Great
Beautiful.
work. Seriously, it's amazing. Oh man! All right, we got on a little tangent. I got a little teary-eyed a little bit talking about the kids.
It's good, man.
But we should bounce back and take some more questions from our audience out here. You guys are fielding lots of comments today, so we appreciate that. Let me go ahead and check over on Instagram and make sure we don't have anything. I think we're all good over there. If you've got more questions, comments, or concerns about the infinite banking concept, please let us know. Jesse, one more time for the people who tuned in late. What are we talking about on this channel, and why are we here?
We are talking about how to save your money and spend somebody else's at the same time. So lots of people give lip service when it comes to money, finances, plans, aspirations, compounding. The way you can actually experience compounding without interruption, without risk, without working any harder, and actually you're the one that's in control, is through this infinite banking concept. Saving your money, spending somebody else's at the same time. It came from a book, came from a guy. I would encourage you to get a hold of this original source material for yourself. Of course, we have a presentation video on all of our channels where in less time than it takes to watch a Marvel movie, we can show you how to save your money and spend somebody else's for the rest of your life. And then people like Jake, they can speak to it. We actually have an Infinite Bankers Facebook community. So it's a group, it's a community, Infinite Bankers, where folks are sharing how they're doing this in life. I mean, we've had questions today about, children, and questions about, this type of investing. Hey, can I incorporate infinite banking with real estate? All this other kind of stuff. So lots of great activity in that group as well. So those are some resources for you.
I love it. I love it. I can't say much more about it. So because Jesse brought up the Infinite Bankers Facebook group, I actually jumped into the group just right now, and I'm going to ask a few questions that are on the group. Now, we did answer them in the group, of course, for those who are in the group, but you guys watching might not be there. So I'll repeat them here. Let's just talk about them briefly. So all I did is scroll that Facebook feed, right? So I'm right at the top. This is something that was recently asked by a young lady by the name of Carrie. So Carrie says, looking to get feedback from the experts. We took out a loan against our policy and we're looking to pay it back monthly. I'm assuming it's better to pay back the loan with interest over taking that monthly amount and applying it toward the PUA? Question mark. Sean, what you got? She says, again, I'll repeat one more time. She says, I'm assuming it's better to pay the loan with interest, pay back the loan with interest, over taking the same money and applying it to the PUA.
So essentially what you are doing is that extra money that's going back to the loan payment as interest, that additional money is going in as PUA. Couple things could happen. You could pay off the loan faster as long as you've set yourself a term. I'm going to pay this for the next 24 months, this amount, and I'm going to pay myself 7% instead of the 5% that it loaned me out at. Well, obviously, you're going to pay off that loan faster. So you'll get to the end. You may have 20 months mark hit, 4 more months of making payments, and you're going to have no more loan to refill. So you're going to take that extra cash that you were already scheduled to pay back to yourself and put it into the PUA. Or you can chunk it off at the same time, do a little portion every time. But it really depends on, I think, if you've been maxing out your PUA contributions. So we always want to pay back our loans. But rule number 1 is make sure that you have enough money to pay your premium. Premiums are the most important thing. Rule number 2 is we like to make sure that we're adding as much additional paid up additions as possible. Rule number 3 is making sure that we're paying off any loan interest when our policy year comes to an end and there is interest that is due, optional, but due. We want to make sure that we don't let that loan interest kind of double down and funnel into our original loan. So that starts compounding against us. So we want to pay off loan interest. And then number 4 is we want to start paying back loans. So my first policy year on one of my policies, I've been paying back loans a little bit here and there, but the idea is I've been funneling as much cash as possible into the PUA, knowing that at some point they're going to tell me, hey, that's all you can do right now. Great. Then I'm taking every extra dollar and funneling it back into loan repayments, because I know one increases my death benefit and provides me with more liquid cash value, and the other one essentially just refills the hole that I kind of loaned from. So I hope that answers the question.
I love that. I was going to say some more things about it. You covered it pretty well. I think I might leave it. We've got a question from Napri, though. And Jesse, this one's for you.
Cool.
Can a trust own the policy?
Yes, absolutely. So there are a few different roles when owning whole life insurance. So there's going to be an insured person. So whoever the life is that's being insured, right? Could be yourself, could be somebody else, because we were talking about kids policy. So I own, so I'm an owner, policies on myself. So I'm the owner, I'm the insured. Okay. I'm also the payor. I pay the premiums. And then of course there's a beneficiary. So those are the four roles: the payer, the owner, the beneficiary, and which one did I leave out now? The insured. Okay. So those are the roles. And when it comes to trusts and how you connect, structures that you have, such as trust, with assets that you own, such as whole life insurance policies, is, you can always make, I'm just trying to cover a couple things here broadly. You could make the trust the beneficiary of the policy. You can make the trust the owner of the policy, and there could be pros and cons. And that's why I would always point anybody back to having a one-on-one consultation call with their agent, or if you're not working with somebody, you need to be able to set that up the way that you want.
I love that. One of the stories that I allude to sometimes, we were talking a little bit earlier about famous people who have used whole life before, but there's also been lots of companies and corporations who use whole life. One of those companies and corporations that I talk about sometimes is Walmart, because for a long time, Walmart was purchasing whole life insurance on every employee that was signing up for their benefits plan or package, right? So when you get hired, right, you get to opt in to their slew of benefits. And one of those benefits on the fine line said that they were going to buy whole life insurance on you. And so that's very similar to your question. Can a trust own the policy? Yeah, sure can. So can a business or an LLC that you have, or a foundation, or anything else you can kind of think of can own the policy, pay for the policy, control the policy. But you still need that one person, the insured person, in order to have life insurance. Just like a business or an LLC or a trust could own the car insurance, but you still have to have a car, right? You can't just buy the insurance and you have no car. You gotta have a car, gotta have a life, a real person to tie it to. So I love that. Okay, yeah. You're gonna love this. I'm scrolling the Facebook group. I'm just scrolling, and I saw that my brother put a post in there and asked for the month of July, what percentage of your income did you save? So let me throw this out there. This is, of course, our curated Facebook group of infinite bankers, people who know what we're doing. We teach the save and spend system. Save your money, spend someone else's. And my brother says, hey, for July, what percentage of your income was saved? And over 53% of the people who responded said that they saved more than 50% of their income in the month of July.
Stellar.
Which is amazing. How would you guys who are watching like to be part of that group? That's what we're teaching people with the save and spend system. We had 23% who said around 25% is what
Beautiful.
I see in the month of July. We had 23% again that said maybe around 10% of my income I saved, and less than 1% that said I saved under 5% of my income.
Okay.
But isn't that the average American savings? 5%. It sounds like the people in our group are a little above average with their thinking on saving.
And I love that. That's exactly right. I believe so, Sean. I think the average savings rate in America right now is a positive number. It's not always positive, because people will have spending problems, right? We have a spending problem as a society, a country. Consumerism is crazy, but it's not always a positive number. I believe it's positive right now. The average saving rate right now is a positive number, but it is not above 5. right? So we've got people over 50% of their money being saved, meaning more than likely going into their save and spend policies, right? Their whole life policies. That's what we do. So believe it or not, folks, it is 12:56. Let's wrap this broadcast up by talking and giving some housekeeping tips. So first things first, Jesse, tell them where we're going to be next week and tell them what time.
Yeah, so we host this time to be able to field your questions, share our best practices. So you can always tune in Thursdays, this midday hour, 12 o'clock Eastern Standard Time is when we're going to be back.
I love it. Sean, tell them where they can find more information if they want to.
You guys head on over to, let's see, where do you usually like them to go now? BankingBros.com, the YouTube channel, the
Save and Spend System.
BankingBros.com. I think that's what we're funneling people to now. If you haven't watched the overview, I would highly suggest taking 45 minutes out of your day, sitting down, maybe in the evening, watching that. It's so much valuable information. You'll get a lot of really good potential questions that you may want to ask somebody before you hop on a call with us. But that's definitely the place to go and catch that information, bankingbros.com. And again, the link is down in the bio, really any of the social media platforms, TikTok, Instagram, Facebook. You can find that everywhere. But take a little time, get yourself educated. I think you guys will much appreciate it.
I love it. Napri, thanks so much for your cooperation and all your comments. I look forward to chatting with you on Monday. Jake, thanks so much. You were on there earlier. Dion, Andre, Rob,
Nelson. Thank y'all.
I love you guys. Thank you so much for joining us. We will see you next week. Same channels, same time. We'll be here. Maybe a new face or two, right? But same channels, same time. We'll be here, and we will walk you through any and all your questions about infinite banking. Thank you guys so much. We'll see you next time.
Peace, y'all.
See y'all.
To the banking bro, said we couldn't make it, 3 cups of choke. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer, we taught you how to be the bank.